All right, David, I know you're excited. We're going to move on to gold now. You've been talking about this a bit. One of the major hedges amid the recent uncertainty, actually taking a leg lower today. Gold down more than 3%. But again, Todd, how much of a hedge is appropriate right now? How do you view it?
Yeah, we've seen advisors increasingly look to commodities like gold to be a diversifier within a broadly diversified portfolio. ETFs like GLD, GLDM give you pure exposure to gold. And then there's some gold mining ETFs. I'm sure David's going to talk about the VanEck ones in a moment. So I'll just highlight GBUG, which is a Sprott ETF, which is actively managed in the gold mining space that is relatively new entrant into the market, but is a compelling one. But VanEck has some great gold mining ETFs as well.
So, David, even with the recent run before today's pullback, again, gold is safe haven. Investors kind of moving away from that safe haven into the equity market. You thought there was still a lot of room and time for investors to add gold. I want to ask you, how are you viewing gold right now? I'm looking at gold right now, trading at about 3,200. Do you have what's your price target? And do you think it's still a good place to put money in this current environment?
I couldn't imagine a better backdrop for gold. So you've got a situation where huge debt, huge spending, political chaos, all the stars are aligning for the macro thesis on gold. Here's the thing with gold. The gold market's a lot smaller than that of the equity market and a lot smaller than that of fixed income market. And you've got gold now significantly outperforming stocks over the 1 year, the 2 year, the 3 year, the 4 year, and we think eventually the 5 year. That much outperformance makes it so that gold can't be ignored. And you've seen central bank buying for an extended period of time. Now you're seeing the return of the Western investor into gold, and that's the gold flows that Todd was just referencing. That backdrop sets us up, we think, for a leg higher in gold. We've got the price target on gold at $5,000. We think it hits there probably somewhere in 2026, simply because you've got a stable asset base, you've got a stable supply. And then all these flows we think are going to translate to higher gold prices.
All right, David, then on the flip side, VanEck, one of the first movers into what a lot of people call digital gold. Of course, we're talking about Bitcoin. It was also lower today, but hasn't always been really trading right in line with gold. Your thoughts on allocations for investors right now?
Bitcoin is the risky cousin of gold. We like it for all the same reasons. It's just a lot more volatile. So for us, it's not either or, it's both of them. Thinking about solutions specifically, we talked about gold before. Ounce, OUNZ, is our gold bullion ETF. And we've got a diversified real asset solution, which has all real assets in it. That's RAX, RAAX. That's the VanEck Real Asset Fund. But on the digital asset side, we have HODL, HODL. So lots of different ways to play it. But it's from our perspective, it's both, not either or. And we think both of them do great in the years to come.
So, Todd, you and I, we've actually talked quite a bit about Bitcoin. Last week, the IBIT Bitcoin ETF saw some of the top inflows. We're also seeing a lot of ETF innovation around mixing Bitcoin with other strategies. And now we're seeing some progress around Ether. Where do you see this all headed next?
Well, you're right. IBIT, again, was very popular. It's the largest of those Bitcoin-oriented ETFs. I want to piggyback on what David just said about the riskier cousin. And I'm impressed with what's going on in the options-based world tied to ETFs. So Calamos has continued to roll out a suite of options-based downside protection ETFs to give you exposure to cryptocurrency, to Bitcoin, but limit that downside, either 100% protected, 90% protected, 80% protected. Calamos has an interesting lineup for people who want to have some exposure to Bitcoin, but not necessarily that same level of volatility.
All right, David and Todd, thank you so much for your time, your insight. What a great conversation. That's going to do it for this week's ETF Edge. Remember, you can catch this and all of our previous shows at www.cnbc.com/ETF Edge. Thank you so much for watching. Have a great day.